Good day, all. Ira Epstein of Linn Associates with your agriculture update for this Thursday, the 1st of August, 2019, 2:50 p.m. Central Daylight Time. So in the agriculture market, more pain happening as prices are falling, but the president today pulled out another stop. You know, you knew, and I've been saying it in my written updates, and I've been saying it here, I don't think that the meeting went well between the U.S. and China. They always say at the end of the meeting, it was constructive. And I wrote last night, the only constructive part of it, they met. Everything else was not constructive. And today you ended that phase. The president put on another 10% on the tariffs of items that we import that had no tariffs on them. And it's across the board from what I see. So Apple's going to feel the pain. Everybody, forget the waivers at this point. That's what he's doing. It takes effect supposedly September 1st. He's already done the study on it. He's had all that he needed to. And you're looking down here. Cotton market getting hit, energy markets getting hit across the board. Why is energy getting hit? Well, China's one of the big importers of the world of crude, right? Their factories are going to slow down as it pertains to U.S. business, most likely. There's your pain coming in. Weather play in the nat gas, now the market's starting to correct that hot weather that we had coming in. So in the soybean market, I admit, I didn't think this market was going to get down and get to the point where it could fill in the Nove beans, the 860 gap. As you can see, the market fell, and on a continuation chart of a weekly chart, 847 today is where the market closed. That is down now for the week, 36 cents. When we take a look at the chart with the lines that I had put on this week, we were here come Monday. And I probably had these either on Monday or Tuesday. I don't know which day I drew it, but it could be either one because I would be connecting these dots here, and that just fit in so perfect. And at this 860 level was an important number. It's a descending wedge. If you draw a line at the bottom, that's what you have. It generally is a chart formation, doesn't come out this way, it often breaks out to the downside. So you had your breakout yesterday, and with today's news from the president, you accelerate the break. Now, if I step over here, you had a gap at this level. You're filling into this gap area now. Pretty amazing, isn't it? I think you're at a point where the market's going to start finding reasons that it's getting a little bit ahead of itself. That is not picking a bottom. That's all that I'm saying. Might be getting ahead of itself. When we take a look at the swing lines, you've been in a downtrend. The breakout, once you got through, and I'll repeat it again, this area on the swing line game was over, and that's what's happened. So where are we in potential support? Well, you're well under the Bollinger Band. You were under it yesterday. And you today, actually yesterday, 881 and a half, the Bollinger Band was 884 and a quarter, you accelerated again. So you're bending the band down. We know the trend is down from what we're seeing, and momentum is oversold. Doesn't need a reason other than filling that gap, in my opinion, to find whatever come the end of the week to stabilize a little bit. Wouldn't be surprised to see it happen. But you've now come back approximately 90 cents from the 948 zone back down to the 860 level. That's a heck of a move when you're a soybean farmer. When you look at the meal market, you have the embedded reading. You're still breaking down 2 days under the Bollinger Band. Now, only 5% of the time do you stay under a Bollinger Band. So getting a day or two under it never scares me. When you have the embedded reading, I'm not surprised at all. Get to the number 4 or 5 days in a row under it, that's when I think the market moves to the right-hand side. It could always move to the right-hand side of that band, but that's more when I look for it. In the oil market, is there any magic about going from a Bollinger Band top to a bottom? I don't think so. And you're just caught in a wicked, and I think I've said this, a wicked nowhere market right here, and that's difficult. In the corn market, falling and falling hard. So this is a market that was just with all the bad weather in the 470s in June. You're now looking at a market, and this is a big break. This is not a small break. It's approaching, 15, 18%. Down to 402 and a half. You did not hold well. You didn't even try to get up and over the 100-day average yet, which means on rallies back up, I wouldn't be surprised to see 414 act as a resistance point. Like the other markets, you got a couple of days now under that lower Bollinger Band, but as I said on meal, you have the embedded reading, and that just rules the day. That takes over the chart. In the wheat market, down, oversold, first challenge of the lower Bollinger Band, not there, since back all the way here at the very beginning of the month, and certainly the very first days of the month. Downtrend, market coming down. Who's buying our grain? So we've got to get the price between the dollar strength, between supply, between other worlds competing with us with lower currencies. You got to find a way to move the product, and price is one of those ways. In the sugar market, we finished off the day down 9 at 12.12. You still are in an uptrend, higher lows, but you can't seem to get away from this 18-day average of closes. Now the market is in overbought territory. If you can clear 12.30, maybe you make a run to the combination right here. If you take out 11.92, you end this attempt at an uptrend, in my opinion, but you don't start a downtrend unless you first take out today's high, don't take out 12.30, and then reverse. Got it? That would be a pattern I'd be concerned about. So if you take out today's high, start looking and make sure that if you're long, that you have your maybe ideas as to where yesterday's low was. I'm not saying it can't go there and bounce the other way. I don't offer trade recommendations here as a chartist. I'm just pointing out ideas. In the coffee, you're still in very big trouble. Look at how this market's just plunging. And as I said, the real is in trouble. This market follows that to a degree. You're coming down. On rallies, look for the 100-day average to offer the initial resistance. 101.15, if you broke that through it, you'd end the pattern of lower highs, lower lows. But because you're embedded, which means slow stochastics got out of oversold and went sideways and are staying that way, locked in. The trend is locked in. Until that's lost, rallies to me are still no more than where the pros are going to be selling into it. Cocoa, you're just oversold. This is not an embedded reading, but it's riding that lower Bollinger Band. You can see what happened on the combination when you hit the lower band in the 100-day average. You started fighting right there. You fell back, and you haven't been able to even rally to it yet. So that'll still be in my mind where the resistance is. Now, if you embed, you even have a bigger problem. In the cotton, you entered a downtrend today. Now you've got the lower highs, the lower lows. The first support's the lower Bollinger Band at 61.92. The resistance is the 18-day average. You break this pattern if you take out 63.98. In the cattle market, yesterday you got down, as you can see, to the lower Bollinger Band. What's my theory? The first time you hit a band, be it to the upside or the downside, is where I think a certain element of professionals take money off the table. I think it's part of their game plan. And it came back. Market finished off at the 107.65 down here. It started off at the 18-day average. Today, my words were ahead of the chart action, it comes back to the 18-day average at 109.20, stalls out there. Where are we in this market? I still think in no man's land. You've got the higher high, the lower low. You certainly have cheap feed costs right now, so the question is, what does that do to this industry? In the feeder cattle, we had talked yesterday the fact that you took out the low of an outside day up often. The word is not always. Often. It goes down, if that occurs, to the first or the closest of, if there's a moving average, be it the 100-day or the 18 under the market as a support, or the Bollinger Band. You got down to that lower Bollinger Band for all purposes, and that's where you held, and then you managed to come back from that about 150 points. Not bad. In the hog market, yesterday we were talking, where's the next support? And I think I had mentioned lower Bollinger Band could be a target. You've got the lower highs, lower lows. Today, when the president put that tariff on, do you honestly think there's any shot they're going to get a pork deal done in any manner, or grains? I don't. Market took that right on the chin, down 350 more points. So this is a market that has just come from the 83 level all the way down to 67.45. That's a big, big move, a big one. And it's all happened at one time, and we'll see if the market respects that particular number. Now, one of the things I do, and if you looked at this morning's update, I certainly thought I looked pretty good early in the morning because we were talking about Bollinger Bands and how it was impacting the financials. And then when I got to the grains, I was pointing out where I still think the market might have gone. And what I get to do in the morning is I think I get to help you, I certainly help myself, with trading confidence, because I'm sitting there and I'm just looking at the charts fresh in the morning. I've already read what's going on in Asia. Then I'm seeing what's going on in Europe. And I typically will, I know I'll do 40 futures charts, but I try to do about 5 ETFs each time as well. And what I'll touch on is technical analysis, fundamentals, points where I think the pros are going to enter, where they're going to exit, stops, profit objectives, throwing it right at you in all of these markets in a simple manner. And yes, consider them exact trade recommendations. Right, wrong, you live by the sword if you're a commodity trader. So I cover all these markets in this exact sequence. Each time there'll be a slide bar you can pull and it lights up grains, meats, whatever market you're looking at, plus a lexicon on the side. Just click it, it takes you right to that area. So if you're not interested in the other markets, why look at them? The cost, and there is a cost to that, 26.5 cents a day to start. Yeah, $7.95 for the first 30 days. After that, if you decide to stay, it's $15 for the next 30 days, or at any time you can switch over to a yearly subscription where it works out to be $13 a month for the next 12 months. Makes it actually 360 days. Works out pretty easy if you think about it. How do you find out more before committing? Go to our website, www.iraepstein.com. Go under Education or Research. You'll see Ira's morning subscriber video. Click on it. It tells you about it. And should you want to sign up, it's right there for you to do. You can also get there by clicking right here. Let me know about the voice. I think I fixed with my IT staff the problem that we had. It should be crystal clear. Take care.